Netflix stock analysis. Is Netflix stock a good buy? Okay guys, so in this video we're going to talk about Netflix stock. So this is a stock that I've been holding for quite some time, and in full disclosure, I am a Netflix shareholder, and I also subscribe to Netflix personally. And there's been some amazing news that came out on Netflix stock. So the stock is up absolutely huge today, guys. As you can see here, we're taking a look at a one-day chart. The stock is up over 14% today, and we're going to talk a little bit more about Netflix and kind of talk about where its long-term growth is going and whether it's a buy or not. Before I get into the video, guys, I want to give you a reminder that Webull extended their offer on getting your 4 free stocks. So they extended this offer until January 31st, 2021. So all you have to do is simply click the link in the description below, and you can get up to 4 free stocks when you simply sign up. Then you have to open a Webull brokerage account, and you have to deposit at least $100 in that account, and you receive 4 free stocks, each valued up to $1,600. So all you have to do is click the link in the description below to get that offer, guys. Okay, so now let's head back to Netflix stock. So right now Netflix stock is sitting at around $570, guys. And Netflix is a stock I mentioned. I wrote an article actually for Seeking Alpha last year saying that Netflix stock is a stock you want to buy if you want to retire in the next 10 years. So obviously it's not a stock like Tesla, it's not a stock like Apple, it's not a stock like ChargePoint and these other stocks, but it's simply a slow and consistent gainer, guys. So over the last year, Netflix stock is up, as you can see, it is up 63% over the last 52 weeks. So this isn't really a stock that I'm trading in or out of. This is stock that I'm basically buying and holding for the long run. So first of all, let's go over that latest Q4 earnings report, and then we'll talk a little bit more about my price prediction, where I think Netflix stock is going in the future. Okay, so here we are at the shareholders letter. So this is really good information on where the company is going. So a couple of the main highlights. Netflix added 8.5 million net subscribers in Q4, and they finally crossed the 200 million paid membership mark, which is a phenomenal mark. And they added 37 million paid memberships last year. That was a record as well. And they achieved 25 billion in annual revenue. That was a record. And they also increased their operating profit, guys. So all the people that have been saying, oh, there's too much competition in the streaming niche, that's just not true, guys. So, you know, Netflix has come out with a lot of awesome content recently. They have The Queen's Gambit, they have Bridgerton, and then the Lupin series, which is really excellent as well. All three of these are basically kind of the cool new Netflix series that are coming out. And of course, Netflix came out with a lot of nice movies over the holiday season, including Holiday. They came out Jingle Jangle. So they had a lot of kind of great content coming out. So let's take a look at these numbers. So as you can see here, Netflix, one of the easiest stocks to understand. Simply, as long as they're increasing their subscribers, their revenue is going to increase as well. So we're going to talk a little bit more about these numbers. So as you can see here, revenue is continued to steadily increase, and operating income has remained positive. And as you can see here, even though you know, they ended up missing their earnings per share, there were a lot of headwinds in 2020, you know, with the whole pandemic and things like that. And even though it did help Netflix get a lot of subscribers, Netflix wasn't really able to invest or spend as much money on content. So that kind of actually hurt a lot of their content library as well. But the good news is that they said that they're going to perhaps be free cash flow positive in 2021. And that's kind of one of the biggest knocks that people said on Netflix. They said they were just simply having to borrow too much money to make content. So it looks like that is going to be taken care of. So as you can see here, we're dealing with around 203 million global paid memberships and over 8 million net ads in Q4, guys. So that's just some awesome numbers. So if we talk a little bit more, I want to talk a little bit more about that free cash flow number, because obviously all of these metrics are awesome, but that's really one of the things that I wanted to focus on in this video, because once Netflix hits free cash flow positive, they won't really have to get into debt to make more content, and we should see a huge growth in the stock price. So as I mentioned earlier, guys, some of the content that they came out with, Bridgerton with Shonda Rhimes, they had Midnight Sky. You know, Netflix has just always been about creating great content, and as long as Netflix continues to create great content, I don't think they'll have really any problems on retaining their membership. So I don't believe, obviously there's been a lot of drama and controversy through Netflix. They had 365 days last year that had a lot of like nudity in it. They had the whole cuties drama with the whole you know, showing the you know, the child kind of spicy and racy type of content. A lot of people were against the whole cuties film and 365 days. So obviously Netflix has always kind of been pushing its barriers and things like that. But as you know, it seems like every time Netflix comes out with some content that is a little bit controversial, they follow it up with some excellent content that people absolutely love. So obviously the Queen's Gambit, that was kind of the headline show that really took the cake last year. And then Bridgerton and Lupin right now are doing really well. As you can see, Lupin, it's a French series. It's actually the most popular in Brazil, Argentina, Germany, Italy, and a bunch of different countries, Philippines, Vietnam. So as you can see here, it said 70 million households chose to watch that series, guys. A really good series. So, Netflix, just as long as they continue to come out with great content, they're going to be doing extremely well. And as you can see here, if we take a look at the Google year search in terms of TV shows, Netflix basically dominated 9 out of 10 spots on the most popular, most searched TV shows. That's just an amazing thing, and it just shows that Netflix really has kind of a dominant market share when it comes to what people are watching in terms of TV show content. So if we take a little bit more and we look a little bit back, let's talk about the competition. So as you can see here, Netflix is an interesting company as well. Reed Hastings, he's always kind of working towards pushing everyone towards streaming. And one of the things I've noticed about him in the shareholder letters, he really doesn't kind of downgrade the competition. He's actually kind of cheering them on. So as you can see here, he says Discovery recently launched its streaming service. Disney Plus is expanding. And as you can see here, he wrote this. He said, if we continue to improve Netflix every day to better delight our members, we can be their first choice for streaming entertainment. This past year is a testament to this approach. Disney Plus had a massive first year, 87 million paid subscribers, and we recorded our best year of paid membership growth in our history, guys. So, Reed Hastings, he's always talking about how basically there's going to be a push from cord cutting into streaming content, and that everyone will get a piece of this pie. So obviously Netflix won't be the only player. Google's going to do better. Discovery's entering the market. Google Plus has been amazing. HBO Max and Apple TV. So it's kind of like a rising tide lifts all boats. All of these people and all of these companies should improve. So as you can see here, probably the highlight of the entire report is how it says, as you can see here, we believe we are very close to being sustainably free cash flow positive. So for the full year 2021, we are currently anticipate free cash flow to break around even. And it says, combined with our $8 billion in cash balance, our $750 million undrawn credit facility, we believe we no longer have a need to raise external financing for our day-to-day operations. So that's a huge testament. And it also mentions that Netflix is also thinking about doing share buybacks. So that was an awesome way to kind of reduce the shares outstanding and return more value to shareholders. So one of the things I want to also show to kind of wrap things up before we get to the price target is that Netflix also does something very interesting in January of every Q4 report. They post like their annual returns. And as you can see here, Netflix stock has done 40% annual compounded growth ever since the IPO. And since the IPO, it's up 50,000%. Over the last 10 years, 2,000%, and even in the last year, 67%, guys. So these numbers have greatly outperformed the S&P 500 and even the NASDAQ. So that's why I say Netflix is a stock you can definitely retire off of, simply because it's so consistent. When you're betting on stocks for retirement, you really don't want to bet on like small cap stocks that are fluctuating. You don't want to bet on stocks that kind of aren't really growing steadily. You want those slow and steady growers. So I think if Netflix can continue to obviously come out with great content and continue to kind of maintain this 40% annualized performance, I think that this is a great stock to hold in terms of retirement, things like that. It's not going to grow probably as fast as Tesla will, but it's slow and steady, and they continue to increase their subscribers. So they have awesome long-term performance, guys. So now let's talk about my long-term price target. For me, Netflix isn't really a stock where I'm trying to guess the price target because I don't think it's nearly as volatile. It's kind of slow and steady, but I think $600 is definitely a short-term price target. And if the fact that Netflix can become free cash flow positive, I think the shares could definitely hit around $1,000 by the end of this year. This is just the beginning for streaming, right? And almost half the people in the world don't even have access to really fast internet connections. So Netflix has a lot of growth. I think Netflix can easily hit at least 400 million subscribers within the next couple of years. That would basically double their subscriber base. Maybe down the road they can hit 500 million, but I think if they can just kind of double their subscriber base, which is definitely doable, 400 million subscribers isn't out of the cards for Netflix. That I think that a good probably price target by the end of the year, something like that, is $1,000. With a little bit longer term, I think Netflix can definitely be $1 trillion company. It's just really that valuable, and people are watching it, and it just continues to impress. So that's my long-term price target, guys. I would say $1,000 by the end of the year, and long-term price target, I think Netflix can approach $1 trillion market cap status, which would put the stock at around about $2,000 per share, guys. So plenty of upside in Netflix. I personally, I don't plan on selling Netflix stock anymore. I'll just basically buy on dips and hold for the long run. So that's it until next time, guys. Hope you enjoyed this video. Please smash the like button if you enjoy my content, and hit this red subscribe button as well to receive more video updates from me. And be sure to check out my daily Stock Watch newsletter in the description below, and check out my private Discord chat. We talk about stocks that I'm watching and other stocks, kind of high growth stocks to buy in 2021. So that's it until next time, guys. Take care.